pretty wild when you stop and think about how our whole online world has changed.
Oh, absolutely.
We've gone from just clicking around websites to, well, practically living and spending money in these digital places, Web3, the Metaverse.
Yeah, it's exploded.
And the money involved, it's huge. Back in April 2022, wasn't the market cap something like nearly $1.9 trillion?
That's right, almost $2 trillion. It just shows how fast this whole thing is moving.
It really does. What does that tell you?
Well, it highlights the speed, definitely. But, with this explosion comes a whole heap of new questions, especially around, rules and regulations.
Right. How do you even govern transactions when they're just happening person to person, P2P, in these, well, decentralized, borderless kind of places?
Exactly. That's the core issue, isn't it? Regulations are usually built for, central companies, specific locations. Web3 kind of throws a wrench in all that.
Oh, there's a lag?
A huge lag. It makes applying the old rules really difficult, inherently difficult.
Okay, and that's exactly what we're digging into today. We've got this really interesting piece by Max Dillendorf. It outlines 5 key regulatory challenges facing Web3 and Metaverse P2P transactions.
And how to maybe overcome them. Yeah, that's a good one.
And we're also looking at another analysis. This one's on virtual currencies and DeFi in the Metaverse, trying to get a feel for the financial side of things, user engagement.
Mm-hmm. And we'll touch on some perspectives from EY, how banks might fit in, and this cognisium idea of MetaFi.
MetaFi. DeFi for the Metaverse, they call it.
Pretty much. So our mission, really, for you listening, is to try and unpack these regulatory, gray areas and look at these new financial systems popping up in Web3 and the Metaverse.
Try to bring some clarity.
Hopefully, yeah. Shed some light on what's going on under the hood.
Okay, let's start with that first big hurdle, who's just a user and who's basically running a business. FinCEN tried to tackle this way back in 2013.
Right, the Financial Crimes Enforcement Network. They tried to draw a line, didn't they, between users just, using virtual currency for themselves.
And these exchangers and administrators, more like the business types.
Exactly. And the key thing in that guidance was that exchangers and administrators, they fall under money service business rules, MSB licensing.
So they need a license, like
Yeah.
money transmitters.
Correct. While the average user is exempt, but, and this is the kicker, the guidance didn't give a really clear, black and white rule for when you cross over.
Right. So you could be doing a lot of crypto deals, but when do you stop being just a user and suddenly need to register as an MSB?
Think about a day trader, someone buying and selling crypto all the time. They're an individual, sure, but that activity, it looks an awful lot like a business.
Yeah, and how does that person explain where their money came from if they suddenly want to cash out big time into a regular bank account, especially if they haven't done any KYC or AML checks?
Know your customer, anti-money laundering.
Yes.
Yeah, it's a real problem.
Yeah.
If they were just seen as a user before.
It is. And Dillendorf makes the point, this lack of a clear line makes it super hard to tell people, okay, now you need to register.
Yeah, how do you advise someone? It's like shooting at a moving target in the fog.
Exactly.
And the bigger picture here for the listener is that this fuzziness, it creates real risks for just regular people. The rules weren't really built for this kind of P2P stuff happening so fast.
So people could accidentally step over a line.
Potentially, yeah. They could find themselves in, sort of criminal territory just because the rules are unclear or incredibly burdensome.
Wow. Dillendorf brings up that Eric Powers case from 2019.
Oh, yeah, the P2P exchanger.
Did over 200 transactions, each over 10 grand, apparently.
Yeah.
But didn't file any currency transaction reports, CTRs.
And FinCEN brought the hammer down.
They did.
And what's really telling is what the FinCEN director, Kenneth Blanco, said at the time. Basically, that the Bank Secrecy Act obligations, the BSA rules, they apply no matter how big or small you are.
So no excuses for being a small-time P2P exchanger.
Nope, you're still on the hook.
And it's not just about filing reports, is it? There was that first ever digital asset insider trading case. The OpenSea employee.
Nathaniel Chastain. Right. He allegedly used inside info about which NFTs would be featured to buy them up first.
Knowing the price would likely jump.
Exactly. And now he's facing wire fraud, money laundering charges, serious stuff.
So without clear crypto-specific rules, people could face the same charges as someone deliberately laundering money.
That's the concern, yeah. It really highlights why we need clearer regulations tailored to this space. Urgently.
Okay, so we have this uncertainty at the federal level, but then you look at the states, and it just gets messier, doesn't it?
Oh, absolutely. It's not like there's one single approach across the U.S. It's a patchwork, often contradictory.
A regulatory quilt made by 50 different people with different ideas.
Something like that. And connecting this back for the listener, this fragmentation, state versus federal, inconsistent policies, it's a nightmare for anyone trying to operate legally, whether you're a big platform or just an active trader.
Right. Dillendorf says FinCEN might have the sort of strongest federal guidance, but the states are just all over the map.
Totally. You've got states like New Hampshire, Montana, Wyoming. They've actually passed laws that basically say crypto transactions aren't covered by their state money transmitter licensing laws, MTLs.
So easier there?
Maybe, relatively, yeah. But then contrast that with, say, Alabama, Connecticut, Georgia, North Carolina, Vermont, Washington.
What are they doing?
Much tougher compliance. They actually require individuals to get an MTL just for doing P2P crypto exchanges.
Wow. Even person to person.
In those states, apparently, yes. It's pretty burdensome.
And then there's New York, the BIT license. That was early 2014.
Yeah, the first big state licensing attempt. But Dillendorf basically calls it a regulatory failure.
Why?
The application process was apparently incredibly long and complex, and very few licenses actually got approved.
So did it maybe just stifle things instead of helping?
That's a really important question, isn't it? With new tech, if you regulate too hard, too early, do you just push activity away or underground?
Yeah.
It's a real balancing act.
Definitely. And Florida had its own saga, right? That State v. Espinoza case.
Yeah.
Selling Bitcoin for cash.
Yeah, initially the appeals court said even a direct two-person deal could count as money transmission, which would mean needing a license.
But that changed.
It did. Shows how fast things move. In May 2022, Florida actually tweaked its laws.
How so?
They clarified that you only need an MTL if you're an intermediary who can, like, single-handedly stop or start the transaction. So those direct P2P bilateral deals, they were specifically exempted.
Interesting. A course correction. And Texas, they're different again.
Completely different. Texas basically says virtual currencies aren't legally money or don't have money value under their state law.
So no MTL needed for crypto transmission there.
Seems that way under their current view.
Okay, so just imagine trying to run a crypto service nationally. You'd need lawyers just to figure out the rules in every single state.
Exactly. It just hammers home the complexity. We really need more consistency, clearer definitions.
It's like navigating a legal maze blindfolded. Okay, so regulators are trying, but they're often using old maps, applying traditional legal ideas to Web3 and the Metaverse. Does that even work?
Well, that's the big question, isn't it? How well do existing laws adapt? We're talking virtual worlds, blockchains, these distributed ledgers, NFTs, virtual money. It's fundamentally different from traditional finance.
It really is. And it's not niche anymore. Big companies are jumping in. Microsoft, fashion brands, McDonald's, Epic Games, they're all making moves in the metaverse.
Right. So these P2P transactions using in-world money or digital items, they're just going to become more common, way more common.
And even though it's virtual, those deals could trigger real-world rules, banking, money transmission.
Potentially, yes. That's what regulators are grappling with.
But Dillendorf mentioned that time lag problem again.
Yeah, regulation just struggles to keep up with tech this fast. Right now, there's a clear lack of specific oversight, clear rules for a lot of Web3 and Metaverse activity.
And what about anonymity? That seems like a big clash.
Huge clash. If we connect this for the listener, think about how much of the Metaverse or blockchain relies on, well, not necessarily anonymity, but pseudonymity. Users have usernames, wallet addresses, not always real names tied directly.
Right.
But traditional finance regulation demands identity verification, KYC, AML. How do you enforce that effectively when people can operate under different digital identities?
It's a fundamental conflict.
Yeah.
A massive challenge. Okay, shifting gears slightly, but still in government action. President Biden's executive order on digital assets, March 2022. What was that all about?
That was a big signal, the federal government saying, okay, we need a coordinated look at this. It told various agencies to really study digital assets, even look into a potential U.S. central bank digital currency, a CBDC.
And it had specific goals?
6 main priorities, yeah. Things like consumer protection, financial stability, obviously key fighting illicit finance, making sure the U.S. leads in this, tech, financial inclusion, and importantly, responsible innovation.
That's a lot to cover.
It is. The order basically said, regulators, get oversight in place, put up safeguards against risks. Which sounds good, but...
There's a but.
Well, Dillendorf raises a critical point. The order directs agencies that might not actually have the specific know-how for the unique challenges of digital assets. Like, how do you prosecute or enforce rules in this space effectively?
So it's like asking your family doctor to do complex neurosurgery. They're smart, they know medicine, but it's not their specialty.
That's a decent analogy, yeah. So the government's definitely paying attention now, but there's still a long way to go to build truly effective, specialized regulatory frameworks.
Got it. And while the regulators are wrestling with all this, the actual finance side within the metaverse is evolving super fast, this MetaFi idea.
MetaFi, exactly. That Cognisium report calls it DeFi for the metaverse, and it really feels like a key concept.
Why? What's the core idea?
Well, the fascinating thing is thinking of the metaverse not just as, cool graphics and virtual hangouts, but as an actual economic system, developing its own economy. And the fundamental principle they put forward is the metaverse is crypto.
Meaning the tech underneath.
Precisely. The financial plumbing, if you like, of this more open metaverse, it's being built with Web3 tools. Blockchains. Think of it having two layers.
Layers.
Yeah, the interface layer, that's what you see and touch, VR headsets, avatars, the user experience, and then the financial compute layer, that's the decentralized foundation, often using networks like Ethereum, that allows for all the transparent, permissionless transactions and ownership.
So Web3 tech gives you real digital property rights, the ability to move value around freely. Unlike Web 2, where everything's kind of stuck inside Facebook or Google's walls.
Exactly. In Web 2, your stuff is often trapped on their platform. Web 3 and blockchain aim for interoperability, true ownership.
Right.
And MetaFi is basically the financial system built on that, the interplay between NFTs, those unique assets.
Like digital art, virtual land.
Right. And fungible tokens, the interchangeable ones, like cryptocurrencies, all happening inside this Web 3-powered metaverse.
So my virtual plot of land NFT could actually interact with lending protocols, borrowing against it.
That's the idea. MetaFi takes the core principles from DeFi decentralized finance. Things like being unstoppable, running without central control.
And composable, the money Legos thing.
Yeah, where different financial tools can just plug into each other, build on each other without needing permission. It's incredibly flexible.
Sounds powerful. Transformative, even. And Cognisium mentioned specific trends pushing MetaFi forward.
Yeah, a few key ones. The financialization of everything, basically turning more and more things, even intangible stuff, into tradable digital assets.
Okay.
Then there's the improvement of DAO services, decentralized autonomous organizations, letting communities govern these systems better. Also, mutualization of risk, exploring new community finance models, and gamification of finance.
Making finance more like a game, more engaging.
Exactly. Making it maybe less intimidating, more accessible.
So MetaFi isn't just theory. It's actually happening now in different corners of the metaverse.
Absolutely. We can see distinct MetaFi clusters already. Think about virtual worlds, the sandbox, Decentraland.
Yeah.
Their virtual land is NFTs. Their in-game money, their governance tokens, it's all tied into owning that NFT land, and the number of people interacting with those systems, their smart contracts, has shot up.
What about games? Play to earn is a big buzzword.
Prime examples. Axie Infinity, Zed Run. They've built whole economies inside the game. Users earn tokens for playing, for contributing. Those tokens have real value. Blockchain gaming adoption is significant.
Okay, and avatars, our digital selves, how do they fit into MetaFi?
Well, projects like CyberKongs or Subducts, their NFTs are your digital identity, sure, but often holding that NFT earns you other tokens.
Like rewards.
Yeah, or tokens you use to vote on things or get other perks. CyberKongs, for instance, gives holders banana tokens just for holding the NFT, and those tokens do things in their ecosystem.
Interesting model. And yield-bearing NFTs, what are those?
Basically, NFTs that make you money. Either directly, maybe you combine them with DeFi liquidity pool tokens, or indirectly, like using your NFT as collateral for a loan on a platform like NFTFi.
Borrowing against your NFT.
Right. And then there are access tokens. Think Bored Ape Yacht Club NFTs. Owning one gets you into an exclusive club, events, maybe future benefits.
It feels like these categories, virtual worlds, games, avatars, finance, are all starting to overlap and mix together.
Totally. They're blending, creating new, complex MetaFi combinations. It's really dynamic.
But it can't all be smooth sailing. What are the limitations, the challenges MetaFi faces right now?
Good question. There are definitely hurdles. One big one is just valuing NFTs accurately. How much is this unique digital thing really worth?
Tricky.
Platforms like NFTFi try to use lending data, what people are willing to lend against an NFT as a price signal, but it's still early days. Then there are legal questions around fractionalization.
Splitting ownership of one NFT.
Exactly. How does that work legally? Who governs it? And just basic interoperability, getting different blockchains to talk to each other smoothly so value isn't stuck in silos. That's still a work in progress.
But Cognisium sees ways forward, bridging NFTs and DeFi.
Yeah, they expect more progress on a few fronts. More fractionalization of NFTs, making them easier to trade, accessible to more people.
Uh-huh.
Also, NFTization of DeFi, meaning DeFi platforms getting smarter about using NFTs as collateral.
Okay.
And maybe even NFTs as derivatives, where an NFT's value is tied to something else, like an off-chain asset, or maybe even your performance in a game.
So, looking ahead, short to medium term, what's the MetaFi forecast?
Likely more complex mixing of these categories we talked about, definitely better user experiences, better interfaces, maybe VR integration becomes more common. We'll see DeFi 2.0 ideas filtering into MetaFi, and just continued improvements in the basic blockchain tech, faster, cheaper transactions.
It's moving fast. Okay, so wrapping this up, it's undeniable that the rules around P2P deals in Web3 and the Metaverse are, well, complicated and still being written.
Yeah, it's a very fluid situation. But what's fascinating, despite all that regulatory uncertainty, is the sheer potential of MetaFi. It could genuinely change how finance works and how users engage in these new virtual economies.
Absolutely, which really leaves us with a big question, doesn't it? For the listener to think about. With tech moving this fast and old rules struggling to keep up in these decentralized spaces, what kind of new solutions do we need?
Right. How do we encourage all this innovation but also keep things relatively safe?
Finding that balance, innovation, freedom for users, but also sensible oversight as these digital frontiers keep expanding. It's the key challenge, really. Definitely something to keep thinking about.